Pleasant and warm greetings to everyone, and thank you for joining today's webinar on COVID-19 and the role of BigTechs and digital platforms in response and recovery. My name is Ghiazuddin Ali Muhammad. I'm the Senior Policy Manager at AFI, and I will be supporting tonight's webinar. I would also like to acknowledge the presence of Dr. Alfred Hannig, Executive Director of AFI. Thank you all, Alfred, for joining us in this webinar. And also to our esteemed panelists. Very quickly, we have Ms. Hakima El Alami, Director, Payment Systems and Financial Inclusion at Bank Al-Maghrib, Morocco. We have Mr. Ehab Nas, Assistant Sub-Governor, Payment Systems and Business Technology Sector, Central Bank of Egypt. Ehab is also the co-chair of DFS Working Group. Mr. Mikhail Mamuta, Head Service of Consumer Protection and Financial Inclusion at Central Bank of Russia. And we have Shi Piao, Senior Advisor at Executive Chairman's Office and Financial. Professor Olenka David West, Academic Director, Lagos Business School. And Ms. Omalola Oladunjoye, Chief Commercial Officer at Jumia, Nigeria. Warm welcome to you all. So without any further ado, I welcome Dr. Alfred Hannig, ED of AFI, to give the opening remarks. Over to you, Alfred.
Yes, thank you, Yes, thanks very much. And good afternoon, good morning, good evening to everyone around the world joining us for this very important webinar. Another one in a series of engagements that we are having currently with members and partners. And having said that, I just wanted to reiterate the importance of the topic for us in the aftermath now of the outbreak of this crisis, because I think what we are discussing today will also form at least one part of the solution that we are seeing in order to mitigate not only the short-term impact of this crisis, but of course also the medium-term recovery is something that we have in mind when we organize these events. We have AFI Working Group members with us. We have partners and stakeholders. And from the partners, I would particularly greet, I think we have Chris Calabia from the Gates Foundation with us. If I'm not mistaken, we also have Lee from the French IFD with us. And we also have Sami Masri from Ministry of Finance of Luxembourg, if I'm not mistaken, with us. So welcome to you all. And of course, also my colleagues from the AFI management unit. Now, let's go into the opening of this event. And I would first of all like to thank everyone that you have made the time. The important number maybe here is that we have around 270 people who have registered for this event. So this is pretty impressive. And of course, we are very excited to learn and share with the member stakeholders and partners as we continue to elevate the work in financial inclusion. Now, while the repercussion, as you all know, of this COVID-19 crisis, which actually has turned from a health crisis into an economic crisis for emerging and developing countries, while the repercussions actually threatens to dismantle many recent development milestones, financial inclusion seems to be one of the few solutions available to immediately address the issues facing the hard-hit economies across the AFI network. And, you know, we sometimes like to make this comparison with the financial crisis, and I have done this before. So let me just reiterate that we feel that financial inclusion is actually better positioned than 12 years ago, when after the financial crisis, we were still testing and learning on how financial inclusion can support economic recovery and strengthen financial stability and integrity. Now, I think we are much further. We have learned a lot in the meantime, and of course, we have also upgraded financial inclusion into a powerful solution that we can now use in order, you know, to look at the challenges that are ahead of us. Now, as in other crises, and the financial crisis in particular, those who are hard hit by the crisis, they live at the bottom of the economic pyramid in the developing world. And these groups really represent or these groups are at greatest risk, let me say, of slipping even further into poverty. Because we're also seeing a risk that we are losing the gains of financial inclusion that we have actually seen in the last 10 to 12 years. And we also know that they're not the same kind of safety nets that you have in the developing world that you can fall back on, nor have you the financial resilience. And of course, equally worrisome for us is how women are further disproportionately affected, including how they cope and how their businesses recover over time. Now, across the AFI network, and I think you have been part of this, we have recorded very robust responses that highlight innovative and impactful interventions and policies that ensure the financial health of these groups and allow us to explore additional opportunities to actively support resilience and recovery. The situation that you all, and ourselves included, are faced with at present includes movement restrictions. And of course, this offers opportunities for digital finance, especially with physical distancing becoming, and I say, the current norm, as it allows for crisis responses to be fast, accurate, and immediately available. Now, it is actually not surprising for us that the BigTechs and the digital platforms are observed on the world scene with regard to their potential role in mitigating in some measure the growing record unemployment, dwindling economic income levels, economic downturn, and cascading impact on the world's vulnerable population, particularly the women, the rural population, informal sectors, and MSME. So this is very much our topic. And as you remember, we walked away from Kigali saying that we don't want to leave anyone behind. So I think now this call is even louder, and I think we have to address these issues. And today's topic, I think, perhaps can pave the way towards one of the solutions that can be useful. Some of the innovative ways in which BigTechs can also support citizens maintain a supply and delivery of essential groceries and necessities, keep small businesses running, support contactless and remote payments, and support governments with rapid disbursement of financial support. All these potential services that we are seeing here, they can be grouped in a couple of buckets, and this is what we wanted to share with you. So the first bucket that we see is BigTechs in payments and financial services. So similar to interventions from traditional financial service providers, we observe digital platform offer waiver or reduction of merchant fees, promoting digital payments that are remote and contactless, facilitate the insurance of their partners, suppliers, and downstream actors, and offer digital credit to players on their platform. So this is the BigTechs in payments and the financial services. But we also see a role on e-commerce and social responses. And here we talk about these essential services that you will find in many jurisdictions. Digital platforms became a conduit already of supply and delivery of essential goods, such as food, groceries, and necessities to many restricted, who are now actually restricted at home and cannot move. Many of such entities also leverage their scale to raise relief funds through crowdfunding while supporting governments with the disbursement of financial aid to identified vulnerable groups and MSME. And financial regulators. And we have observed that there's a growing collaboration actually between digital platforms and government and regulatory bodies in addressing specific barriers in response to the global crisis by leveraging on their unique economies of scale, learning, and differentiated capabilities. Regulators in turn are presenting new proportional and actually a very, very useful appropriate policies that would spur inclusive and sustainable innovations that are, again, in alignment with the existing regulations, data protection, and other concerns such as privacy and so forth. Now, dear colleagues, ladies and gentlemen, let me really highlight that we see that there are many obvious benefits. They exist, but we also know that there are new and emerging risks of technology that are outside the conventional prudential responsibilities of financial regulators. And I think this becomes particularly relevant when we discuss topics as the one that we discussed today, as we really do appreciate the opportunities presented by the BigTechs and digital platforms from this plenary. I encourage all of you to ponder also on the ways to harness technology to address present issues around the access, usage, and quality of financial services, the financial health of the vulnerable groups, the impact on supply chains and MSMEs, and how these insights can be drawn upon to enhance regulatory supervision, consumer protection, and of course also market conduct. Now, let me also reiterate my call for action to the regulators, to the market actors, and to the other stakeholders to leverage digital technologies in a responsible and safe manner as we reach out to vulnerable segments of the society, such as the poor, the women, the forcibly displaced, and the MSMEs. And I just want to make very clear, and maybe this is the quote that you want to take away from this session: further exclusion is not an option. It is therefore our hope that the insights drawn from the deliberations today on this plenary will make it very clear there's a need for better market conduct and enhanced financial capability, which is never out of fashion, even in the advent of the glory of financial technology. So I wish you a very fruitful discussion. I'm very grateful that I could be here to open this. And of course, I'm very much looking forward to seeing the outcomes of this very important event. Thanks for coming and have a good day. Thank you.
Thank you so much, Alfred. Now, ladies and gentlemen, let me now introduce our technical moderator for today, Mr. Adeyemi Omotoso, AFI Policy Specialist for FinTech. Adeyemi, the floor is yours. Thank you.
Thank you, Giaz. Warm greetings to everyone. Thank you so much for joining this webinar. Before we start off on this exciting journey and the discussions of this plenary, permit me to set the context for today's discussion. As you all know, in 2018, we had a global emergency, which was a financial crisis as well. And the banks were hit first in this crisis. And the solution was obvious to regulators at the time. Regulators said, let's save the banks. And for most regulators, that meant dealing with organizations that were in few numbers, in some cases 10 or 20. And that was pretty clear and straightforward. And they were able to respond to that global emergency and mitigate several issues. In 2020, however, we have a new pandemic on our hands that has a human face, also a financial and economic face. And the obvious solution to this crisis was said to be save the small businesses and people. But as said by the Minister for Finance in the United Kingdom, he said in the UK, we have over 1 million SMEs that are predicted to go bankrupt this year. How do we save them all? So we begin to see the scale of this new pandemic and how it presents some new and nuanced challenges for regulators. How do you save millions of SMEs, millions of businesses, and also save individuals that are daily workers or gig workers in informal economies? This is the context of the big problem we have right now. And when we look at the context of the problem, we begin to see where do we find capabilities that have the scale to handle this kind of complexity. And not looking far away, we see big techs and digital platforms, which are typically technology companies that are presenting platforms or marketplaces connecting supply and demand. So you have platforms that leverage technology extensively, that are connecting SMEs, small businesses, suppliers of goods and services to buyers and customers across a digital medium. And we've seen them rise to the occasion by actually presenting solutions to this unique problem. So as many countries institute mobility restrictions in order to curb the spread of the virus, we see a lot of big techs and a lot of these digital platforms come to the fore in ensuring that people have access to essential services. So your daily groceries, the daily meals you would have, daily goods or daily products you need to actually survive, even during a lockdown, we're supplied to you in an efficient manner. And we also start recording that most of these big techs are also supporting the partners they have. So they have SME partners that are working in remote places, that are working in confinement, even in a lockdown. They were finding new ways to reach them to provide even protection for them from the virus and to ensure that their businesses can continue. We also see them supporting governments with relief funds, with supply of PPEs, with also communication and other forms of intervention to mitigate the effects of this virus. And from this, we are beginning to draw lessons, seeing that the capabilities these unique businesses have can be leveraged by regulators in addressing the solution we think would work, which is saving small businesses and the most vulnerable people in our societies. And this really is the reason why we are having this webinar. How can we leverage on the technology, on the capabilities, on the knowledge and learning, the scale that BigTechs and digital platforms have, and extend that into regulatory perspectives and dimensions. So basically, this forms the crux of what we'll be discussing today. And I'm happy to introduce you to the panel that will be taking this discussion forward with us. I think Giaz mentioned them. So we have 6 panelists on the plenary today, 3 regulators, 2 BigTechs and platform providers, and we have 1 think tank expert that will be sharing some light on what the response has been, or what lessons we can draw in terms of using these lessons to drive inclusion, and to also ensure that we can leverage them to actually come up with new approaches to regulation. And how do we implement this going forward into a recovery phase? This is what we'll be looking at today. Before we go ahead, I would like us to look quickly and conduct a poll. The essence of this poll is to have a snapshot of the landscape. How do we, or from the audience, so we want to understand what the landscape looks like in your country regarding this topic. So I would encourage my colleagues to please start the poll. A quick look at the results from the poll. We see an overwhelming consensus from the network that digital platforms, e-commerce platforms play a critical role in driving inclusion, and they also play a critical role as an essential service for this current pandemic. Again, there's consensus that they are actually essential for mitigating the effects of this pandemic through supplying essential services, goods, and even necessities we all need. And when we asked, looking at what is the major hindrance for populations in different countries from taking up these digital platforms and leveraging on them, we see highly it's financial and digital literacy is probably one hindrance that the network has highlighted, followed by the lack of infrastructure, which could be telecommunication, addressing systems, digital ID, and what have you. And again, this basically is just highlighting what problems we already know and how we could start linking the solutions from the private sector and the stakeholders to what we do as a regulator and within the network. So again, I want to thank everyone for taking the time to provide this context and to also share their thoughts on this topic. Moving forward, I have with me 6 distinguished speakers that will be joining and leading this plenary with us. I have Mr. Hihab Nasser from the Central Bank of Egypt, Akima El Alimi from Bank Al-Maghrib, Morocco. We have Mr. Mikel Mamuta from the Central Bank of Russia. We have Chi Piao from Ant Financial. We have Professor Olayinka David West and from the Lagos Business School. And we're also joined by Ms. Omolola Oladunjoye from Jumia. So let us kick off this discussion. We've learned from the current poll, we've seen from the current poll, and we've seen and we've also observed globally that BigTechs, digital platforms, e-commerce entities are actually playing a critical role in responding to the COVID-19 situation, particularly through promoting digital financial services and ensuring essential services are delivered to people during mobility restriction. And we also see that they're actually creating good strides in engaging MSMEs and in supporting women and different actors and supply chain actors downstream of this ecosystem. So my question will go to the regulators on the panel. How have you, within the context of your country, also responded to this pandemic? And how have you provided an enabling environment for BigTechs and digital platforms to also operate? I would request Akima from Morocco to please respond to this. Thank you.
Thank you, John, for this opportunity given to me to discuss this important subject. In Morocco, in Central Bank, no need to remind the role of digital financial services in financial inclusion. As we know that they are an important vehicle for reaching population that are excluded or underserved by the financial system. With the COVID-19 crisis, the importance of digital financial services in providing secure, low-cost and contactless financial tools to citizens and government has become even more apparent. In Morocco, for a while, it's been clear to us that expanding the use of digital financial services supports economic development and poverty reduction. That's why the promotion of electronic payments starts very earlier with our first strategic plan that began in 2003. For that, we start by putting in place modern financial infrastructure that could support the development of DFS on a sound basis. We also focus on interoperability, which is necessary to avoid the fragmentation of the markets and the risk of cost. With the lockdown measure taken by the government, Al-Maghrib quickly put in place the necessary flexibility in order to lighten condition of account opening, including the possibility of remote opening. With this regulation, banks are able until the end of June, but the period could be we can rise this period to use new technology to proceed eKYC for account opening. Payment institutions, which are non-bank actors, are allowed to proceed to remote opening of a level 2 of payment account. This is a payment account capped to about $500 with only a valid phone number and a photo of the national ID card. And also, to widespread the acceptance network, which it's an important piece to digitize the whole ecosystem. We just authorized the merchant onboarding with the national ID and the ID tax number. This is important for us to enhance merchants enrollment and widen the electronic payment acceptance. As I said, we were in the central bank. We were aware of the potential of digital technology to bring DFS to people who lack access. But technology is also bringing a risk of fraud, risk of usurpation of identity, risk of personal data lost, and etc. So to allow most people to benefit from digital financial services and ensure a competitive ecosystem on the sound basis, we have introduced a new regulation to allow, previous slide please, to allow non-banks actor called payment institution to open accounts and offer payment services. The license given by the central bank is based on some criteria related to capital adequacy, protection of customer funds, anti-money laundering, security and safety of IT, and the protection of personal data. And also in the same targets to enable a safe environment for online transaction. The technical PSP should to be compliant with some central bank requirements on security standard like PCI DSS, and to further secure a non-present card transaction, we also adopt the triple D secure. As you know, this norm protects users against fraudulent use by an unauthorized individual. Next slide, please. What's important to say also is that it's very important to enable safe environments for DFS developments. It's necessary to set up within the central bank a strong oversight mission to ensure that all the actors comply with the high standards of security edited by the central bank, and also in order to mitigate all kinds of risk like fraud, misuse of data, and etc.
Thank you so much, Akima.
Thank you.
Yeah, thank you so much for that. Yeah, great insights shared from you, Akima. We were able to see clear measures that were implemented by the Central Bank of Morocco. On this note, I would like to invite Ehab to also provide some perspectives from the context of Egypt. Ehab, the floor is yours.
Thank you, Ademi. Hello, everyone. Hope that you are all safe at your ends. I'll give you a brief about the measures taken by Egypt regarding the COVID-19. Actually, Egypt took proactive precautionary measures to curb and offset the negative implications of COVID-19 virus outbreak. The actions taken were covering many dimensions, from the finance sectors for SMEs and consumers. We dispersed around 500 EGP pounds for unstable manpower, where we used mobile wallets and cards as a mean for disbursement. We gave 6 months as a grace period for SME insurance document installments. We deferred 50% of the monthly installments for the microfinance clients. As well, we extended the loan maturity period for SMEs for a period of 6 months without any fines.
Sorry,
as well.
Yeah, sorry to cut in.
Yeah?
Please, if you can speak up a bit more so we can hear you.
Yeah, is it good now?
Yeah, much better now. Thank you.
Okay, we have as well canceled all the negative lists of companies and individuals who are stumbling with banks, and we facilitated the payments of natural stumbled individuals whose debts are less than £1 million, with the aim of removing them from the negative lists. Next slide, please. For payment systems and electronic services, we allowed electronic KYC for customer registration for free. We increased the mobile wallet daily limits, and we removed any fees for opening wallets, for purchase, for balance transfer, and as well for creating virtual card numbers, which is a very good mean here to people to do e-commerce transactions, for people who don't have cards to be used in over the internet. For payment cards, we meant to put mandates on banks to issue contactless prepaid cards for customers for free for 6 months. We increased the daily limits for the prepaid cards, and we increased the limits of the contactless transactions we almost double it, from 300 to 600 EGB pounds. Next slide, please. We as well capped the limits of cash withdrawals to avoid risks of spreading cash. We exempted the local transfers in Egyptian pounds from all fees and commissions. We removed the merchant discount rate on all point of sales in order to enable merchants to motivate them to receive payments in an electronic way, in a very cheap way. We activated the QR code payment methods on all merchants, and we allowed banks to register their existing base for internet banking services in an electronic way. When it comes, next slide, please. When it comes to banknotes, we issued preventive and precautionary controls and procedures to be followed when dealing with the traditional banknotes. We issued instructions to banks and exchange center to sterilize all ATMs on regular basis and provide preventive measures. And we as well have collaborated with schemes and the private sector in the Egyptian market to launch awareness campaigns about using electronic payments, cards and wallets to increase the awareness of people for using electronic payments versus using cash, and the risks that may arise when using banknotes. Thank you very much.
Thank you so much, Ihab, for that brief insight into what Egypt did in response to the pandemic. It's quite insightful learning how you encouraged digital payments and introduce some new products into the market. Thank you so much for that. Without wasting so much time, I would invite Mikhail to provide the context for Russia in three minutes, Mikhail. Thank you.
Yeah, thank you very much. Thank you very much for the invitation, first of all. And given that I have limited times, let me focus not on the slides. I believe everybody can look through this, but focus on some maybe observations that we take now from the reality. Yeah. So first of all, we believe that we should disseminate all measures on two parts. The first part is anti-crisis measures that we should take right now. But the second part is support measures that should be implemented at the next steps, next stages, when economy will continue or will be back to growth. Yeah. What is interesting about the anti-crisis stage? First of all, what we can see now, it's dramatical change of customer behavior, right? It's dramatic change of SME sector and production sector in general, right? So people spend much less money rather than they spent before the pandemic. People stay at home. People are in isolation. And it means that landscape of the economy is dramatically changed these days. But what is good here is that it's really a good opportunity for fintech, and it's really good opportunity for online services, because everything is going to online. Yeah. And we see in Russia, I think the same as in many other countries all over the world, that more and more purchases are done online, and let's say it will support development of online services much more rather than 10 years before that. Yeah, this is maybe one good thing about pandemic, because other things are not so good, of course. Yeah, but we should use this opportunity. We should use it to improve quality of services which are provided online. We should use this to build infrastructure, to build legislation, and to take everything, every measure to support this kind of movement. Well, if we talk about Russia, then we are pretty digitalized. That's true. For example, 4 main services, retail services such as payments, savings, insurance, credits, were digitalized even before the crisis. But what we can see now, can you please go to the next slide? Please, the next one. if you can help me to switch this. Okay, so what I would like to say that now we have implemented some special measures to support anti-crisis, let's say, stabilization, or to support stabilization during the crisis period, yeah? And these measures are focused both on people, society, and the economy. Regarding people, we put in place a program for restructurization of loans or credits. And this program is available online, is available by internet, available by cell phone. It's very easy to take if you need credit holidays. It's very easy to take it by phone up to 6 months. It's very online project, yeah? The second idea is support of SME. We put in place some measures to provide SME with loans, which is very, let's say, with low interest rates, such as 2% loan. We also have 0% loans to support SMEs. And it's also unique because it's never been done before. Yeah, it has never been done before. We also put in place opportunity to open accounts virtually, I mean distantly, without physical presence, yeah? And we work very hardly now on implementation of national biometric system, which will help people to get every services online from the house, from their home, from whatever they are, yeah? And yeah, thank you. We also work on the new marketplace. Marketplace, it will be a special law, EU law, which will support development of internet platform, or maybe platforms, some of them, that will help people to get every service they need online. And this platform or this service will be connected to national biometric service, national biometric identification system. And national biometric identification system is in place now. It's been implemented since last year. And the marketplace project we hope to start this year. And once it's completed, it will mean that maybe 90 or 95% of all operations will be available online for people, yeah? What does it mean for the future? That's a good question, because we don't know the future. We don't know how pandemic will change the world. We don't know how and when it will be ended, but we all hope that this technological drive, technological vision that we see now will help us to build the of our economic and social development. We'll do it more friendly for everybody. But we should pay a lot of attention to risks related to this new kind of products, such as cybercrime, for example, personal data protection, and many, many other things that should be taken in place if we really want to build safe and sound system, financial system for everybody, which will be digital in the future. So I hope that together we can do much more here. And thank you very much, Afi, to raise this topic and moving us forward here. We are very pleased to be part of this way. Thank you very much.
Thank you so much, Mikhail, for that interesting contribution. I would like to highlight something you said, which I think is quite important and something we should start considering as a takeaway from this discussion, which is looking at this pandemic and this current global situation as an opportunity to start building, on regulation, on infrastructure, on our approach to actually embracing financial inclusion, using new capabilities and new technologies. I think this is a very valid and important point. Thank you so much for sharing that.
Thank you.
But we quickly move on to Omolola, who would provide the context for how the response has been looking at the African continent. So Omolola, the floor is yours.
Hello, good afternoon, everyone. Can you hear me clearly?
Yes, quite clear.
Fantastic. Thank you very much for this opportunity. I'll keep it short. I think when you look at what has happened so far in the world, and you look at the responses, especially from the consumer side, we see a lot of people are approaching, as we are approaching isolation and uncertainty, due to the huge overnight, there's a change in their shopping behavior. So we're going from bulk buying to online shopping. People are changing what they are buying, when and how. Also, as we see more cities going into lockdown, non-essential businesses are being ordered to close, especially, you know, in Nigeria and many parts of the world as well. Consumers are generally, the non-essential cities are being asked to close. You see consumers are avoiding public spaces, and what you also see is that they're also running out of money, right? Because before the initial lockdown, there was a lot of bulk buy, people had savings. It's gone on for longer than anticipated. So people are being very cautious in terms of what they spend, how they spend it, and where they spend it. Also, people are very cautious with health, with social distancing, with availability as well. So they're doing a lot of online. Now, how did e-commerce sites respond to this? And I'll focus largely on marketplace. I won't give specific examples to Jumia, but at least I'll relate it to more of e-commerce. So and our observations. What we saw is that a lot of marketplaces started to refocus their strategy on essential items, such as groceries. So everywhere in the world, when you look at Flipkart, when you look at Jumia, even in South Africa, you could see that they were now focusing on stay safe items, such as masks, gloves, essential items, which were mainly groceries. Like for instance, with Jumia, we launched the Stay Safe campaign with partnership with some brands. We also had to review our commitment to our customers and to our sellers in terms of looking at the delivery timelines, because obviously there were, you know, lockdown, there were restrictions with movement, and so we also made sure that customer experience was very important. When we were looking at the supply chain, right? I mean, of course, there was no doubt there was an impact. There was an impact on supply chain. There was an impact on availability of stock. We had, for instance, you know, markets closed where some sellers had their stock, so they couldn't access the markets and they couldn't access the stock as well. We had borders closed where people couldn't bring in the goods in from other countries, so that was also a challenge. But I think what we also started to see was, which I found interesting, was that you had a lot of people started to diversify into manufacturing hand sanitizers, into manufacturing face masks, and not yet in the glove level yet. So it will be interesting to see what comes out from manufacturing gloves. But then you saw that also, what I saw, that a lot of people went on e-commerce websites and also Instagram and Facebook. Every time you're on Instagram now, you see sponsored products, you see ads from small businesses coming up, because a lot of people stayed at home for too long and they became very creative. So I think in terms of supply chain, just to summarize, the large impact was on sellers not being able to access the stock in the market, which didn't really change much the direction, because anyways, a lot of companies a lot of e-commerce sites were focusing on groceries. I think we also started to see sellers who were predominantly selling mobile phones now also selling face masks, because they couldn't access the stock and they still needed to feed and they still needed to get things running. On an e-commerce front, a lot also happened with partnerships with big brands, which was basically how the impact on what was going on in the market didn't necessarily affect e-commerce sites. It was that we now started to partner with the big brands who would supply directly, and also started to offer pickup services to some sellers who weren't very comfortable with coming out, or who didn't have the access to move. So we offered pickup services for those sellers. Now, in terms of delivery, which was a concern, what we also did was to make sure that all delivery associates had the right gear. So they had their mask, they had their gloves, in the hubs, in the pickup stations. Also, they had the hand sanitizers, which also gave consumers a bit of a relief. So they knew that every package that was coming to them was a healthy package. Every package that was coming to them was being delivered by a healthy individual as well. I mean, we had some countries where, you know, before a package had gone out, they would have taken the temperature of the delivery agent, and they would attach it to the package just to show, and they would put the name of the agent, the phone number, the time, and the temperature in which it was delivered. So a lot of these measures were being considered all over the world in terms of how to, deliver safe packages, and also create safety around e-commerce, safety in so many ways, in terms of health, in terms of payments, so many areas of safety. I think I would just wrap it up in those parts to say there were implications in terms of people. Of course, we already had the technology, so we started working from home. We moved fast into working from home. It didn't really change much in terms of people and how we're able to fulfill orders or processes.
Thank you so much, Amalola, for that brief intervention. It was quite clear that two main things can be drawn from what you've said. One is the agility of the business to respond in such a timely manner, from processes to supply chain management to even how you interact with your consumers. Second point I could pick up from what you've said was the business transformation, how quickly you could transform the business to start looking at your inventory to meet essential needs and essential goods. This is quite painful. Thank you so much for that presentation. So learning from the interventions from Ant Financial and from Amalola, we begin to see a trend in terms of how the economics of scale, leveraging technology can help drive huge impacts to a large number of people or to even a large number of businesses. And we see that behind all of this is that agility that is already embedded in the way they operate as a business. So my question to Professor Yinka would be, how do you think regulators can codify the learnings from this tech giants, from these digital platforms, or even from regions where technology and digital platforms have become commonplace, like Asia? How can we codify and translate these same learnings into first regulation and also into the context of developing countries in probably Africa, for instance? How can we approach this? Professor Yinka, please.
Good afternoon, everyone, and thank you so much for having me here today. It's a pleasure to listen to the fellow panelists, and I think that I want to agree with Mikhail to say that there's no such thing as an opportunity in crisis. And what we've seen over the last couple of weeks globally is this accelerated digital transformation across board, whether it's e-commerce or businesses, because we've all had to work digitally and trade and live and play digitally. Another thing that we also see is how Ant Financial really epitomizes big tech and big platforms with economies of scale as well as economies of scope, because they've been able to roll out and build on their scale with different products and services. But I think for the central banks and regulators, the whole idea of this has also been an opportunity to stress test our financial infrastructure, to look at our financial infrastructure critically and ask the fundamental questions that I think a lot of the central bankers have been doing, which is the financial flows, because financial flows are required for each and every of these enablement transactions we're doing across the supply chain. Are they digital? Are they secure? Are they accessible? Are they safe in terms of contactless? And I think this has also brought on the issue about different strategies to regulation, where the rules and standards that you're looking at are not only about your traditional prudential guidelines and things, but they're extended to technology rules and standards regarding cybersecurity and these risk-based things that we need to take into consideration. There's also the consideration of proportionality. And then how do you think about the audience that we're dealing with, which really are the bottom of the pyramid? And if you recall from Alfred's introduction, we've always focused on the bottom of the pyramid as the poor. But now that bucket has even been widened to include gig workers, or the underemployed, or those who daily workers and things. So we're working with a larger bucket, and also women. So when Omolola was speaking about traders having their products in their markets, a lot of these traders are women, and women are also economic contributors to the family and the household. So you can imagine, with those opportunities lost for those women, some of those households would have been thrown further into poverty. So one of the biggest challenges for the central banks and the regulators is really this issue about uniform identity, because one of the challenges in our African context is identity poverty. We don't all have identity systems. And then when Mikhail was talking about the biometric verification and things, we're still not there yet. So building out the technology infrastructure, building out the digital infrastructure are only necessary components to ensure that we can continue to stack different products and services on top of these systems. So the issue about what can we learn from Asia, I think the things we can learn from Asia is how do we onboard quickly? Because when we look at what has happened in with COVID, one of the biggest things we've had to do was how do we now provide palliatives and conditional cash transfers to the poor? How do we do that quickly and onboard them? Because it's also a use case for DFS and onboarding people rather than continuing with cash mechanisms in general. So that's one use case. The other thing is also about this issue of which she spoke about, which is the issue about innovation platforms and open source. How do we share and have more reusable components to ensure that we can reduce the time to produce and time to market in general? Because, and don't forget that African markets are primarily mobile first markets, and that's really what brought us on into the space in terms of financial inclusion. So people, organizations in Kenya and some other markets have also taken the lead by reducing transaction charges and fees on mobile transactions to also encourage that people are using more mobile transactions in general. How do we build contactless and cashless systems? How do we ensure that there's logistics and delivery services like Omolola mentioned? Because right now in that survey, one of the things we all realize is the fact that yes, we're going home less, but that's for those of us that are digitally literate and enabled. There's still a large proportion of our countries of our citizens that are not digitally literate and enabled. How do we onboard them? How do we provide goods and services? And even in our wet markets, because of the closure and the lockdown, you saw a lot of accelerated transformation where even wet market providers were taking orders by WhatsApp and we're doing bank payments and things like that. So you find out that the opportunity is there. So how do we capitalize on these things and digitize these flows to ensure that the physical flows can work with the logistics infrastructure, the financial flows will continue to be safe and secure, and then also the information flows, which is what the platforms are doing. But the caveat is also that when we think about digital, we also need to think about protecting the citizens, because financial education and cybersecurity and cyber education is also very low. So one of the things that happened in Nigeria was a lot of phishing scams where people would get SMS messages asking for information because they've qualified for certain palliative schemes and things like that. So that accelerated awareness. And because we're a diverse country, we also need to think about it from the different languages and different ways to communicate to ensure that the message gets across. Thank you.
Thank you so much, Professor Inka, for that eloquent and clear presentation on drawing the linkages from what we've learned from the technology providers and what regulators should start focusing on. And you mentioned quite some very important points, from probably focusing extensively on women and that ripple effect it has on the household and on businesses. Again, looking at onboarding, digital ID, KYC, and how we can digitize most of these processes. And also using this opportunity as a circle to actually bring more people into the financial flow and make sure they're educated in how to use these services. Thank you so much for that presentation. I would like to say to the audience, if you do have questions, you can use the question and answer function below on your screen and start typing in your questions. I would ask one more questions to the panel, and immediately after that, we'll start taking questions from the floor. So quickly, I would like to throw this question to everyone on the panel. We are beginning to see clear linkages between what platforms do, how they leverage technologies and their capabilities to respond to this pandemic in a very efficient and fast way. And they've been able to scale that response to reach individuals and businesses. And this is what we've identified as probably the best way to solve the crisis on our hands, solving the crisis with small businesses and with individuals. And as we become quite aware of more of these learnings, the question now is, how can regulators, how can central bankers become more agile? Really, how can they start looking at regulation around supervision, licensing, compliance, and oversight functions for even technology-led businesses. How can this happen? How can they become personalize most of these learnings and translate that into regulations that would actually achieve these fine points we've raised? I would like quickly, in 1 or 2 minutes, reactions from Ahab on this. How do you think regulators can onboard these lessons and take it forward into the future?
Let me tell you that the professor has really give a good summary on what regulators should really do. A very good summary. Um, Let me tell you, it's the issue here is that it's not only regulators have to work on regulations that facilitate. The regulators have to talk together with each other, because in digital platforms where you are providing different portfolios of products, you will find that these products are falling under the supervision of different regulators in the same country. So dialogue between regulators inside the same country is very important, where something like the sandboxes will be very efficient in applying certain regulations on such a product before issuing them to the market. The other thing is the dialogue with the digital platforms itself, because you cannot issue regulations without making the appropriate public-private dialogue with them, because if you did this, you will simply issue regulations that will hinder them from doing the business that is very efficient actually in the ecosystem. So these guys are apart from the ecosystem, and it's no-brainer that they are able to solve a lot of the financial inclusion issues. So proper dialogue, I do believe, with the regulators, within the regulators themselves, and with these type of digital platforms is the key in order to achieve success.
Thank you so much, Aya, for that. So dialogue is key. This is well noted. I would like to invite Akima. What do you think can be done, and how can we take this forward?
I think that I agree. I totally agree with the professor and also with Ihab to allow digital platform to develop on safe environments. Central banks should to ensure enables environments for this sound development. And we have, in my sense, in my point of view, focus in some essential elements for accelerating this development. We have to invest in prerequisites for developing digital financial services, such mobile broadband infrastructure, especially in a remote area. We have to focus also on development of agent network that meet individual local need, also for cash in and cash outs. It's important. We have also focus on expansion of digital identification, including biometric system. What is important also is to keep the dialogue with all the stakeholders. But it's important to understand the needs of the private sectors before to establish or regulation that should be a risk-based regulation. My last point is we have to also focus on financial literacy program, because it's very important to ensure that new users of financial services don't fall prey to over indebtedness or some predatory lending, and end up worse off. Thank you.
Thank you so much, Akima. So again, adding to what Ahab said, infrastructure is key, and expanding the scope of what our agents can do is also something we should look at. So thank you so much for sharing that, Ahab. I would like to move to Mikhail, but had this question to Mikhail. So we have a question from the audience addressed to you, and they're asking, based on the measures you mentioned for MFIs in Russia, on deferring parts of the maturity of the loans they give out, and also giving 6-month extension. The question is, what measures have you put in place as the regulator to support their profitability and to make sure that MFIs themselves are not negatively impacted by this recommendation you've given? So I would like you to respond to this as you also provide inputs on what regulators can do better. Mikhail?
Can you hear me? Can you hear me?
Yeah, we can hear you now. Thank you. Please go ahead.
Okay. Yeah, regarding the question, well, we have with holidays. There is no influence on revenue. There is only influence on cash flow. So for 6 months, up to 6 months, a natural person or SME can take these credit holidays and not to pay anything during this time. But these payments, which are missed during this 6-month period, will be paid later. So revenue will be okay, but cash flow, it will influence cash flow. But to support banks, this is not about MFI. This is also about banks, microfinance institutions, every kind of lender. Yeah, we provide them, lenders, with special credit lines from the Central Bank of Russia to support their liquidity and to support cash flow gaps. So this is the answer that I hope is useful. Thank you.
Thank you so much for providing that clarity, Mikhail. So quickly, I would like to take this discussion forward by asking Chi, again, how can regulators partner with institutions such as Ant Financial in assisting SMEs for loans and to expand the scope of how they can reach the market, particularly during this pandemic, and also looking into the future, how do they scale this kind of relationships with entities like Ant Financial? Chi? While we wait for, I think we've lost Chi. I would like, Omalola, if you can you respond to specifically how have you looked at addressing concerns for women businesses, women SMEs, and how do you think regulators can also support your intervention in this regard? Omalola, please.
Hello again. I think when you look at, because Jumia is a marketplace, right? We have, I think when we look at our seller base, I would say it's equal share between male and female. We haven't singled out per se, you know, the support gender-wise. I can speak generally to what we had done to boost businesses, and looking at and I'm going to break it down into different sub-segments. Now, when you have an option like a marketplace, what this allows is creativity to an extent, like I had said initially, which is that people know that if they're able to get the stock or if they're able to manufacture the stock, they have somewhere that they can sell. What we did generally during the lockdown and during the COVID period was that we waived, for instance, storage fees. Normally we would charge storage fees for every day that an item is in our warehouse, but because we also understood that people didn't have access to their shops, and you know, charging storage fees might eat into a bit of their margin, what we did was that we waived those fees as well. Again, I had mentioned that, you know, sellers who didn't have access to their stock, we had offered pickup solutions for them where we would pick up their stock and again inbound them in our warehouse. So we offered logistics services to them. In terms of the other support that we had also done was more in terms of education. So educating, for instance, we had sent out a training, we offered online training training on how to make masks locally. And so we had a video, and then we sent communication to all the sellers in terms of how to also do this, and also sharing with the sellers the list of essential products that we were looking for based on the demand on the internet and based on basically what consumers were looking for. Those would be the support that we had offered to a lot of the businesses. I won't say specifically to women or to men, but just general response.
Thank you so much, Amalola, for that insightful answer. Moving on quickly, I would like to quickly ask Professor Yinka. We have a bunch of questions from the audience, looking at first the cost of electronic channels and digitization. You said it's huge investments. How do we manage the cost as we want to promote these channels? While you answer that, there's also this question around post-COVID-19, all the efforts we've made in promoting digital channels, becoming agile. How do we ensure, as a network of regulators, that we can carry forward these learnings and implement them for the long run? And then finally, specifically, how do we start looking at balancing the trade-offs of technology and risk to make sure that even though we're providing and promoting technology solutions, we're also addressing the risk going forward? If you can address this quickly. Thank you.
Okay, thank you. And thank you all. I think the issue of cost is something that we can't seem to get away from, especially on some of our own continents. And I think this is even more pervasive in rural areas where we have agents who have a higher cost to serve. But the whole idea is that as we begin to see demand, and as demand grows, we hope that economic principles will actually also kick in and reduce the cost. And how do we grow demand? And I think one of the use cases that we see today is education, because we're all now having to provide education services remotely. So how do we also ensure that we can stack things and use the same channels and use that infrastructure and optimize that infrastructure to ensure that the cost to each person now reduces rather than just one or two people using it? So that's another way. The issue about also government payments, how do we also drive government payments through these channels and the financial infrastructure, and using digital infrastructure is another one. So it's a huge investment, and especially in countries like ours in Nigeria, where we also have foreign exchange limitations and a lot of the things that we're acquiring are imported. How do we ensure that we can actually make economic sense of everything, because the rural locations have a longer business case? So it's either we get some more patient capital or we get some ingenious financing. And then also some organizations are also thinking about using different technologies, using TV white spaces and things, but it's really not a one size fits all. We have to try different approaches and see what gives us the optimal return and result in general. On the second one, in terms of how do we carry forward the learnings, I think interactions like this through AFIA platforms to share and carry on the learnings. But another thing that's important is also codification of what worked and what didn't work, because we're all doing a lot of sandboxing, live sandboxing, which is test and learning every day as we go into different situations. We don't know what's going to happen in another 1 month. So how are we documenting and journaling these things, and also sharing these notes to ensure that we can actually leapfrog and scale from one another's learnings rather than having to start from ground zero all the time. The next one is how do we balance the trade-offs and risks? And I know that as central bankers, that's one of your most difficult burdens in terms of balancing all these issues that we need to. But I think that it's also with some caution and diligence, and not throwing caution to the wind either, but just looking at things and looking at it in different pieces. I think that central bankers need to, there isn't one approach, there's going to be multiple approaches. And all the other speakers spoke of different things that we need to do. I think we need to do all, but we also need to document. We need to be intentional and deliberate. There's some sectors that are more vulnerable, like the women and the IDP, the displaced persons and things. How do we ensure that we're more deliberate in reaching those? Is it through better understanding of extending liquidity support to microfinance institutions and banks that are closer to the bottom of the pyramid? So there's a multitude of things that we need to try. But I think with the central banks as well, we don't have the luxury of time. And I think that's the most difficult challenge, where we don't have time to really think things through, test them out. So we have to take learnings from different markets and almost be a sandbox in itself for the regulatory instruments and the regulation and principles we want to share out. So I'll stop there. Thank you.
Thank you so much, Professor Inka, for providing that clarity.
I think even I have a 1 hour window, but I'm still on.
Yeah, so thank you so much, Professor Inka, for sharing that clarity. As we look towards the end of this plenary, I begin to see some clear distinctions of what can be done and how we can take these discussions and these regulations forward. And this is quite insightful. I see there's a few more questions here, so I will try to put all the questions together in one last question to our panelists. And this question will be, we've looked at the response, we've looked at the current situation. We're starting to prefer and give out solutions that we can consider going forward. So looking into recovery now, the question is, we are beginning to see some clear measures, and it's ranging towards different thematic areas. A lot of cities are now declaring clearer skies. Air pollution rates are significantly reduced. We're beginning to see more people get onboarded in certain countries. We're beginning to see more use of digital channels. We're beginning to see gaps as well of this increased usage of digital channels, digital literacy, financial literacy, consumer protection, and market conduct issues. We're beginning to see how do we make all our solutions gender sensitive to ensure diversity and inclusion, and so many things. So my question to the panelists right now will be, looking at all these learnings and looking at what we've said so far, what are 2 key points that you think we can take forward as a network of regulators and make an immediate action to implement? So again, how do we leverage the capabilities of technology firms, and how do we marry it to the prudential, to the safety and the security we want as regulators, and come up with something that is actually good for posterity? So across board, I would like everyone to just give 2 points in under 30 seconds of what we can take forward from this conversation. I'll start with Mikhail. While we wait for Mikhail, Akima, can you give us 2 takeaways from your side?
Sorry, I was on mute. The challenge, I think, is how to harness the technology opportunities while addressing the risk. It's necessary for central bank to have close collaboration with all stakeholders to understand the needs of the players and to adapt to risk-based regulation. And also it's necessary to have to set up a strong oversight approach that allow us to mitigate the risk, including the risk of cybersecurity and fraud that could stop or have negative impact on financial inclusion.
Thank you so much, Akima. Hehab, can you give us your 2 submissions?
First thing is communication between all the stakeholders. This is very important in order to for both sides, the regulators and these digital platforms, to understand each other's. These platforms has to understand the regulations and the precautions that the central bank is always trying to impose on them, and central banks as well have to be agile and issue regulation based on a risk-based approach in order in order not to harm them with the region. Second thing I do believe is that we have to focus on the financial literacy. People has to be aware about these digital platforms. We have to make them aware more about the new products and the financial inclusion incentives that is provided to them.
Thank you so much, Hayab. Omolola, can you share 2 key points you think regulators can do to support your type of business and to allow you to expand in scale as well?
Yeah, thank you very much. I think for me, 2 key points. One is that the regulators need to understand e-commerce and its benefits clearly. We see, I mean, what I tend to see in a lot of the countries is that there's no sync. So going back to what was that initially said, 1 is communication with all stakeholders, and 2 is clearly stating the benefits of e-commerce to the economy based, given these situations. For instance, in Nigeria and in some other countries, when the lockdown was announced and the exemption list was released, e-commerce wasn't clearly stated as essentials. It took a lot of, it took a lot of work to actually then get on that list. Then also, another thing that I would say has to do with more of enabling the infrastructure. I mean, what really supports e-commerce, right? Here we're talking about, affordable broadband. It would be nice to also have that. Then last point, sorry, I have 3, not 2. Last point is standardization and having some regulations around e-commerce and how we would operate so that there is no abuse in the sector.
Thank you so much for your submission. Those are quite valid points, and I'm sure regulators have taken notes. Is Mikhail still here with us? If you can share 2 points from Mikhail.
Yes.
So your 2 takeaways for the audience, please. Mikhail?
Yeah, sorry, connection is not very good, so I missed your point. Can you please repeat it again?
So we're looking at rounding up the discussion, and I'm asking 2 key takeaway points that you think regulators can take forward, considering the learnings we've had so far.
Well, no 2 key points, as I mentioned. First, we do not understand yet how pandemic situation will influence on consumers, will influence on the economy, how it will change its structure. But it's absolutely clear that digitalization and services online will be more and more available. So the second point I would like to mention that we should very hard now special regulation devoted and related to online services to protect consumers. It should be infrastructure regulation, it should be consumer protection regulation online, digital consumer protection regulation. It should be personal data and cybercrime. So those are 4 the most important points I would like to stress. Thank you.
Thank you so much, Mikhail. And in closing, Professor Yinka, everything you've said so far has been interesting. They've been important. But if you are to choose from this list, what 2 key things would you recommend they take on as an immediate action?
I think I would stick to 1, and I think it's about building trust. Regulators need to focus on building trust in the ecosystem, especially for the consumers, and this entails consumer protection, market conduct, as well as cybersecurity. And once there's trust, all these digital flows will work harmoniously. Thank you.
Thank you so much, Professor Yinka. And again, apologies to everyone, we're a bit over time. But again, it's been an interesting discussion, and we've learned so much. And through all our presentations, we can highlight some key takeaways. So we've seen harmonization, we've seen communication, building infrastructure, paying attention to digital financial literacy, paying attention to market conduct issues, consumer protection issues. We've learned about the benefits of co-sharing and co-learning, even with our private stakeholders and partners. And these are lessons we can take forward as we start looking at recovery. On this note, I would like to say a big thank you to my panelists. They've been exemplary, and I'm sure the audience can give a virtual round of applause. And also I would like to say thank you to everyone for finding the time to join this webinar. and contributing in questions and in your attendance and all. Also, a big thank you to the executive team at AFI for giving us this platform to share and to learn. Also, I'd like to thank all members for also sending in contributions, ideas, and thoughts on what we need to do and how we can take forward the lessons of inclusion, even looking at technology as a driver. Finally, I would like to thank my colleagues at AFI, the events team, for an excellent job. And to everyone, I want to say have a wonderful day and a good evening. Thank you all once again. In closing, I would like to remind everyone there's an evaluation for this webinar. It's just 2 or 3 questions. Please click on the link. I think it's probably going to show on your screens or probably in an email. We encourage that you provide feedback on what you've learned. If you have questions that were not answered, please send them through emails and we would address them as quickly as possible. And once again, thank you all for your time and enjoy the rest of your day. Thank you.
Thank you very much.
Thank you. Thank you.
Thank you. Thank you so much.
Thank you, everyone.
Thank you. Bye, everyone.
Thank you. Bye. Bye-bye.